Good morning, treasurers. After spending some quality time with our family and friends in Diwali, Night Fintech team is back. This is your host Parthesh from Night Fintech, and you are listening to Night Snippets. Here is what you need to know before going into trade for 8th November 2021. In the international market, finally the Fed tapering announcements have come. Fed announced that it will begin to pull back its 120 billion monthly bond buying program later this month. The central bank is set to reduce its bond purchases by $15 billion a month, meaning its QE should end by the middle of 2022. As far as the October NFP numbers, non-farm payroll numbers are concerned, 531k jobs are added versus an estimate of 450k jobs. Unemployment rate stands at 4.6%. Unemployment rate is down by 0.2%, which is encouraging. Even though tapering was announced, Fed did not hint on any early reversal of the rate cycle. Hence, bond market cheered and US 10-year closed at 145 and 30-year at 187 percentage points on Friday. An interesting fact, on 4th January 2011, which is at the start of the year, which has now 11 months back, 2-year US gilt was trading at 0.11%, which is now at 0.39%. 28 basis point increase in 2-year gilts. 5-year gilts were trading at 0.36, which is now at 1.04, which is a 64 basis point increase. Short-term yields are rising and the yield curve is flattening. We'll be seeing this phenomena in India as well, and hence offload your very short-term papers as soon as possible. In the crude oil market, crude is trading at $83.60 per barrel. Short-term range for crude is 83 to 87. OPEC has decided to continue with their plans of increasing the oil supply by 0.4 million barrels per day only, ignoring US requests to increase the supply to curtail the crude price rise. In the currency market, dollar index or DXY is at 94.33. Today's range seems to be 93.95 to 94.59. US dollar is expected to trade in a narrow range. USD CNY or Chinese yuan is at 640. USD INR with a high of 74.64 closed at 74.46. IPO inflows were the main reason. Support at 74.10 and resistance at 74.50 does exist. Trading strategy for currency: the inflows from IPO from foreign investors have kept the demand high for rupee, making it stronger, as we discussed last week. Also, RBI is worried on inflation, especially imported inflation, as crude is staying high than the budgeted forecast. The rupee strength due to the IPO inflow is visible and will continue for one more week. In the domestic market, government bonds were trading with a very little volume as traders were waiting for FOMC and NFP data last week amid Diwali holiday season. As there are no shocks in the US bond market after FOMC tapering decision, we expect Indian bond markets to trade positively for the next 2 days. Remember, we have a CPI coming on Friday after market hours. Knight Research team's internal models have identified an uptrend in inflation, which is also visible in the domestic grocery shoppings. 563 2026 closed at 573 versus 573 the previous trading day. 610 2031 closed at 636 versus 636 the previous trading day. Trading strategy for the domestic bond market: neutral to positive market are likely to be. Friday's CPI, if increases drastically can spoil the party. Expect OIS curve to cool down and rates to come down. Trading range for 610 2031 seems to be 633 to 638. That's it for today. See you tomorrow with the new episode of Night Snippets.